China targets NVIDIA, a sign of escalating tensions. China has launched an antitrust investigation into NVIDIA, a leading U.S. chipmaker. This comes after the U.S. imposed restrictions on exporting advanced chips to China. The investigation focuses on NVIDIA's 2020 acquisition of Mellanox Technologies. China wants to know if the deal violated any antitrust rules. At the same time, Chinese companies are limiting the sale of drone parts to the U.S. and Europe. These actions are part of a wider pattern of escalating tensions between the two superpowers. Both countries are vying for dominance in key technologies like semiconductors and artificial intelligence. The investigation into NVIDIA, along with the export restrictions on drone components, sends a clear signal. China is willing to retaliate against U.S. actions that it perceives as unfair or threatening to its interests. China's playbook, past actions, and future implications. This is not the first time China has investigated foreign tech companies. In the past, these probes have often lasted several months. The consequences for the companies involved have been manageable. However, the current situation is different. The stakes are much higher, and the geopolitical climate is more volatile. China is also employing other tactics to protect its interests and gain an edge in the tech race. It has restricted exports of rare earth minerals crucial for semiconductor manufacturing. Additionally, China is promoting its own tech champions and encouraging the development of homegrown technologies. The message is clear: China will not back down from this fight. It is prepared to use all the tools at its disposal to protect its interests and achieve its technological ambitions. A new era of uncertainty, navigating the geopolitical landscape. With the return of President Trump, tensions between the U.S. and China are expected to escalate further. Trump has been a vocal critic of China's trade practices and has shown a willingness to impose tariffs and other protectionist measures. This could lead to a tit-for-tat trade war, with both sides imposing tariffs on each other's goods. This new era of geopolitical rivalry creates uncertainty for businesses and investors. The global economy is increasingly interconnected, and disruptions in one part of the world can have ripple effects elsewhere. Companies operating in the tech sector are particularly vulnerable to these tensions. They often rely on global supply chains and face restrictions on the export of sensitive technologies. Investors need to be aware of these risks and factor them into their investment decisions. Investing in the age of artificial intelligence opportunities amidst volatility. Despite the geopolitical headwinds, the demand for artificial intelligence continues to grow. AI is transforming industries ranging from healthcare to finance to manufacturing. This technological revolution presents significant opportunities for investors. Investors should focus on companies with strong fundamentals and a track record of innovation in the AI space. This includes companies involved in developing AI chips, software, and applications. While the current environment is volatile, it is important to remember that market corrections can create buying opportunities. Investors can consider using strategies like buy the dip to acquire shares of high-quality companies at discounted prices. The key is to stay informed, be patient, and focus on the long-term potential of AI. By investing in the companies driving this technological revolution, investors can position themselves to benefit from its transformative power.